Did you know that the tax burden in the UK is the highest it's been since the Second World War? In this video, I'm going to tell you about some of the changes that took place recently and how you can pay less tax in 2023. So the new tax year started on 6th of April 2023 with significant changes to the tax system. I'm going to go through 10 of these changes, and as we go through them, tell you some of the ways in which you can save tax. So number one, the tax-free personal allowance has again been frozen at £12,570 until April 2028. And this means that 3.2 million more people will start paying income tax as their incomes exceed the frozen personal allowance. Number two, in England, Wales and Northern Ireland, the higher rate threshold has been frozen at £50,270 until April 2028, resulting in a further 2.1 million taxpayers paying tax at 40% by the time the freeze ends. And number three, in Scotland, the two highest rates of income tax have been increased from 41 to 42% and from 46% to 47%, with these changes being announced by the Scottish Government in February this year. So what can you do about points 1, 2 and 3? Well, the key thing is to make sure that you're claiming all allowable professional expenses against your employment income. And you can make a claim for all allowable expenses for the previous 4 tax years as well as the current tax year. And you can claim for, among other things, your GMC fee, your indemnity insurance fee, your BMA fee if applicable, and your Royal College fee, as well as any Royal College exams taken under a trainee employment contract. These can really rack up, so make sure that you claim everything that you can, and check out our website for more information on this. Number 4, the additional higher rate tax threshold has been reduced from £150,000 to £125,140 throughout the UK, and that means that more taxpayers are going to be paying tax at the highest rate. Although this is only likely to be applicable to a minority of people watching, if your income is at this level, where you're paying 45% or 47% in Scotland, you may want to consider if you can trade in part via a company, for example if you have a private practice. But if you do want to consider this, then make sure that you take professional advice, as it may actually be worthwhile not doing so. Okay, so just make sure you know exactly the pros and cons of doing that. Number 5, which we're going to consider with number 6, the tax-free dividend allowance has been cut to £1,000 this tax year, down from £2,000, meaning that around 635,000 people will start paying tax on their dividends. And this is going to be cut further to £500 next tax year. Know that the rates at which dividends are taxed were increased last year by 1.25% across the board by the ill-fated Health and Social Care Levy, which was ultimately scrapped, but the increased dividend rates were kept. Number 6, the capital gains annual exempt amount has been cut to £6,000 for this new tax year and will be going down to £3,000 in the 2024 to 2025 tax year. So more people will be paying income tax on dividends and capital gains tax on taxable disposals. So it's really worth using your ISA allowance wherever possible. Every taxpayer gets a £20,000 ISA allowance every tax year, and any dividends and gains within the ISA are tax-free. So if, for example, you're thinking about buying some shares in a company, it's well worth doing so via an ISA, because any dividend income you receive is tax-free, and if you go on to sell those shares, gain that you make on the shares, hopefully you make a gain and not a loss, but that gain is also tax-free. Number 7, the main rate of corporation tax has increased from 19% to 25%, and the super deduction regime has ended and has been replaced with a new scheme called full expensing. So if you do trade for a company, then make sure that you take full advantage of this new full expensing regime, because you can deduct the cost of qualifying assets against your taxable profits and therefore bring down your corporation tax bill. The last 3 changes are actually good changes, or good news for taxpayers. So number 8, the primary threshold for national insurance contributions, which is basically like a personal allowance for national insurance, that's been increased to £12,570 any self-employed individuals, including GP partners. The reason for this is that it's basically a catch-up increase to match the same increase that employees got in the previous tax year. Number 9, from April 2024, for 38 weeks a year, 30 hours per week of tax-free childcare will be offered to eligible working parents of children aged 9 months to 3 years. Note that if one partner has an adjusted net income over £100,000, you lose the entitlement to the tax-free childcare scheme, which is really a lot of money that you lose there. So if you are hovering around this income level, consider if there's anything you can do to bring yourself below the threshold. Please make sure you check out our marginal rate blog for more information on that. And finally, number 10, one of the big things to come out of the budget recently, the lifetime allowance for pensions has been scrapped and the annual allowance has been increased from £40,000 to £60,000, reducing the number of people who are going to end up receiving an annual allowance charge, which a lot of doctors were getting. Now, that's great news, but of course it's such a big change. Definitely check out our YouTube video on all the pension changes and our blog as well, and to find out how that is going to affect you. Okay guys, that was just a whistle-stop tour of changes that have taken place since the 6th of April 2023 and a few ways you can save tax. Thank you for listening. If you have any comments, put them down below. I'll try and answer any questions that come there if I can. But otherwise, everyone take care. Cheers. Bye-bye.